as you might be able to tell from the thumbnail and then again in the title of this video, I have a little different outlook on on the stock market. I'm a retired financial advisor. I was in the stock market for years. I built a very successful financial planning practice, and for reasons we can discuss later, I decided I needed something to do, and I got involved in YouTube. And I started sharing my knowledge with about November of last year about the stock market and my attitude. And I actually, as a result, started doing some very extensive research. And I read some books that I think you should read, The Big Nine being one of them. That's in the description. And right now, my favorite book, The Future is Faster Than You Think. And it gives you an outlook. Between that and the Big Nine, you get a real strong outlook as to what the future looks like as a result of disruption and the convergence of technology. I personally believe that the next 5 years in technology is going to be equivalent to the preceding 100 years. My channel is, what I'm trying to build is a tribe, a group of people that want to learn about the stock market and want to share knowledge. I'm starting a newsletter that is basically going to give, when I see something that I'm going to act on that day, rather than sit down and make a video, which can take up to 4 hours, I'm going to send out an email. And you can sign up if you're interested in that email at bestofusinvestors.com. The URL's right down here. So that's what we're about. So let me get to my thumbnail. Is there going to be another crash? One of the other things that I'm happy about, we only have about 5,000 subscribers right now. We're looking to get to 1 million as quick as we can, because we want that much knowledge coming together and sharing an exchange of ideas. But one of my early subscribers is Peter. Peter is from Sweden, and Peter writes me both in the comments regularly. He's a big fan. And then every once in a while, he emails me. And I got an email from him, and I'm going to show it to you. Here it is, and allow you to read it. But the gist of it is and the reason I'm doing this is I think he's asking questions that I think a lot of you would ask. Do you think the stock market is going to crash again? Yeah, I do. I really do. Then I skip down, and it says he throws a lot of niceness at me, and he says, "How much do you think, and how long?" And my answer to him was, "I have no idea. I don't know how long the crash will take, and I don't know how deep it will be. But my point is, I really don't care." And I'll explain that later. Jumping down here, it says, I trust your knowledge. I trust my own. I want some tips. And what I came back to, and I really hadn't thought this through until Peter asked this question. If it crashes, it crashes. And that's okay. Because I'm investing for 5 years. Because in 5 years, I'll have twice or more of what I have today. The crash or no crash, I'll have the same. Now, that might sound a little shocking to you, but I really don't believe this crash, particularly since it involves a corona crisis and an incident of George Floyd being killed. Those have nothing to do with Microsoft's price or Apple's price or Facebook's price or Google's price. And so let me show you on some charts exactly what I'm talking about and why my thumbnail says another crash, bring it on. I really don't care. This is a chart on Microsoft. Peter indicated this was one of his major holdings. So let me illustrate my point here that it really doesn't matter if there's another crash. Let's assume that you bought Microsoft back somewhere in let's say February of 2019 at $114 per share, and you just gloriously wrote it up to $188 a share in February of 20, and then you all know what happened. It just crashed. It came storming down to $133. Well, but then look what happened. It came right back and it's up to 199. Now, my question to you is, if the coronavirus had not happened and this was all wiped out, where would Microsoft be today? I tend to argue it would be pretty close to $187.47, right where it is right now. So does the crash really make any difference? Then let me throw in the premise that we're really investing for what it's going to be worth in 2024. So if I go up from 2024 and I follow this channel that Microsoft trades in all likelihood, it's going to be up here somewhere around $250 a share. Now, does it matter? And this is the question. Does it matter? Will it not make the 250 if it takes a dip here and gets down to somewhere around its 200-day moving average to 170? Does it really make any difference? Now, sure, it would be nice if we took it from 187 and we bought back in at 173 and or 170 and we pocketed another $17. But what if it doesn't happen? What if it doesn't happen and you get out here and you just keep waiting and keep waiting and keep waiting and it keeps climbing and the crash doesn't happen? What does this matter? If you're a long-term investor. Now, if you're a day trader, yeah, it matters a lot. But I don't care if there's going to be a crash. What was the other stock? I think Peter said he held Apple. Let's do the same thing. Again, we're looking at weekly charts, and we're looking at Apple. And let's illustrate it this way. Let's say that in February of 17, you bought Apple at 131 and you took it up here to 228 and you didn't get out and it crashed and it came down in January of 19 to $145 a share. Let me ask you this. Would it have been any higher today at 352 if this crash hadn't occurred? I don't think so. I think it would have probably just jogged along and caught into here, and then it would have jumped up, and then if this crash didn't occur, it would have just gone along and it would have gone up. So my point is, it doesn't matter. Will there be a crash? Of course there will be a crash. Does it mean that we should be trying to time the market to get out? I don't think so. I think our investment objective is to own the companies that are going to change our life over the next 3 to 5 years. Well, it's 2020, so 2023 is here, and 2025 is here. So that's where we care it ends up. And in 2025, it would look like maybe Apple's off the chart and somewhere up here above my computer. This is my point. Do not try to predict the falling knife and do not try to catch the falling knife if, in fact, you are a long-term investor. If you're a day trader, go to another channel. This is not your place. I have no advice for you because I don't care to do that and I don't care to get into it. This is what our channel is all about. Finding the stocks that are doing the right things right now to have the value we want them in the future. Now, I also get a lot of people who are saying this is way overvalued. I just got one on Google. Let's look at Google. said, this is way overvalued. There is no way that, yeah, maybe if you're pricing it for today, but we're not pricing it for today. We're pricing it for 3 to 5 years out in the future. And Google, 3 to 5 years out in the future, is going to be worth somewhere in the neighborhood of $3,000 a share. So I don't care if it comes down. Again, logic tells me it'll come down to its 200-day moving average and drop from, where is it at, 1479 down to 1337. And so you might argue that, well, we need to get out now because it's going to go. We don't know that. We don't know that. What we do know with some level of confidence is it's going to be worth $3,000 a share in 2025. And that's all that really matters to me. Now, if in fact it comes down here and gets even down here below its trading channel, okay, I've got money on the side. I'll buy some of it. I'll add to my holdings and increase my margins. But I'm not going to get out now. No way. So that is the essence of what I feel. I invest for the future. I do a lot of research, and I believe these are the companies that are going to change my life. What we are dealing with, and what Peter is dealing with, is what I like to call the unwanted roommate who lives in his head, who gets in his face and says, Peter, you're going to lose some money and it's going to crash and you need to get out now. No, you don't. Not if you're a long-term investor, because the risk of you mistiming it is far more than the potential reward. Because the risk, if you get it wrong, because that person's going to tell you in your head the same baloney, and you're not going to get into the right point. You made a commitment to Apple and to Microsoft that you believe they are going to take you into the future. Then let them do it for you. And tell that roommate in your head to shut the hell up, because you have a plan and you're going to see through that plan. Now, where does that roommate come from? I only know this because I dealt with it for a long time. I went through some very long conversations with my unwanted roommate until I realized that I had done a lot of good things and things that worked out in my life, but then I did a lot of things that really screwed up. And they all were in the same kind of category. They all kind of revolved around the same principles. And what I realized was there was 10 days in my life that set my character and set my beliefs that would determine how I would react in any and all situations for the rest of my life. So I went back and researched those parts of my life and I reconciled them. I came to understand why I find it so hard to love other people and why I feel that other people have a difficult time loving me. I found out why I have the fears in my life that I carry with me. I found out why I feel discarded and left on my own. I came to that realization. So I said, I think there's a lot of people who have the same problems as me. And once I reconciled it, I decided to write a book. And it says, Find Happiness by Discovering Who You Are, Why You Are You. If you want some freedom in your life, this is probably one of the top 3 books you need to read. And blow my horn, pat myself on the back. You need to learn what I learned over the last 75 years and come away younger than I was when I gained this freedom, when I found this happiness that puts me in front of you right here today.